Good afternoon, everybody. It's November 12th. You're watching the Stock Market Brief Show. I just recorded this episode once, and now I have to record it again because, once again, my mic messed up. Oh my gosh, it's so annoying. So I'm going to try to go through these fairly quickly. I do got quite a bit to talk about. We're going to talk about expected moves, where we stand as far as market conditions, the normal stuff that we talk about in the Stock Market Brief Show. So if you like this stuff, make sure you subscribe. But we're going to hop into the mega cap names. And we're also going to look at some of the names that have been setting up on my tight list as well. We're going to get right into it today. I want to just call out, I haven't had a video out, but we did make one giving out these weekly implied moves on the S&P 500. This is the daily time frame. And guess what? We came right into that level. And since then, you can see the SPX just doodling right in and around those levels. We are above the gamma flip line. So that we will see volatility suppressed, right? Dealers will look to buy the dip and sell the rip. That's a positive sign. The closer we get to this or flip under it, you might see volatility actually increase and substantially increase. Like you'll have dealers sell into the selling and buy into the buying. It'll be much more unstable feeling if we cross down underneath these levels over here. We are above the all-time high VWAP. Tomorrow's daily implied move, 6809 to about 6900 for the SPX. You can see over here on the 15-minute time frame for SPY, doodling in around these areas. Your 5-day moving average is starting to incline. That's a positive sign. We're holding these key VWAPs, the all-time high, the November low, the November month-to-date VWAP. So if we come down here, it might feel like a lot, but really that's pretty bullish sign and bullish consolidation. If we start breaking underneath these areas, then I think that'd be a little bit more cause for concern. If you take a look down here, look at the monthly IVOL range down here. I do supply these levels on the Patreon group. You can see it over here, but then also I shared this one too on X. This one is the November month to date for the Qs, and we bounce right from that, creating some pretty good opportunities. If you want these daily implied moves, weekly implied moves, monthly implied moves, and even alerts, I added it to what's included in my Patreon group, which is only 16 bucks a month, or it's even cheaper if you buy an entire year. You'll get expected moves, right? You'll get the entire TradyTix bot suite, which includes the query channel, all kinds of cool stuff. But this I'm most proud of right now is a bot that I created where you can go in here, type commands, and get, levels from a daily perspective, weekly, monthly, on whatever stock or equity that has options traded with it. You can also get premiums and discounts. So what the IVOL premium and discount is, pretty rad stuff. And that includes a 1-month average and a 1-year standard deviation. And now win price from one of the main, tradable options, any option that has a weekly expiration, there's about 600 of them. You'll get, when they hit their levels, you'll get an alert sent to you right away in the Discord from either a monthly upper, monthly lower, right? 2 standard deviation, your daily lower, daily upper, 2 standard deviation, and even weekly alerts there too. So if you're like, just, scroll through there really quick, you'll see, hey, what's really moving right now in the markets, and it could create some really good opportunities. If we take a look at the Qs on the 30-minute time frame, we are above the 5-day moving average. It is declining still, and we're kind of pinched between the November low and the high, all-time high VWAP over here on the Qs. So if we can break through this, that opens the door for the upper week to date weekly implied move. Now, if we start breaking below these levels, then it's a little bit more cause for concern. I'd be looking for a gap fill. Okay, so right now it's just kind of a bullish consolidation, but yet it's still kind of giving you a cautionary sign to the bulls because we haven't fully flattened out yet and started to turn up. I will note though, on the larger time frame, so for example, SPY or SPX on the monthly, you can see we tagged right into the monthly 5 EMA, and that is still inclining, okay? And this actually happened pretty much across the board. It happened also in the Qs, which aligned with the lower monthly, right? You could see that it tagged that and started to move from those levels, and it even happened in IWM. We came down to the monthly 5 EMA, and it started to find from those levels. It's when it starts to flatten out to turn down, you got to be a little bit more cautious. Speaking of the IWM is holding the November low VWAP. It is flattening out. It is consolidating sideways, so you'd like to see it above the all-time high to open the door to 250-ish, right around there. But if we start breaking below the November low VWAP and the 5-day moving average, it could set us for a potential move lower in something like the IWM. Now, if we start to fall under the gamma flip line and things start to come off, just be aware that CTAs, there's the potential of them to become sellers. That's not the case right now. They're not doing anything. And when we get above the gamma flip line, right, guess what? Vol control funds became buyers. When we got below it, bam, they became sellers, which is really added to that volatility. So once again, if we fall underneath this gamma flip line, which right now it's at about 67.60, or we get closer to it, we start breaking from it, vol control funds, CTAs, there's a stronger possibility that they become sellers and can add into a lot more swings in these markets. If we take a look at some of the intermarket stuff playing out, oil, was down pretty substantially on the day. Big moves in oil are quite warning shots. So I'm going to continue to monitor this, but a strong move down in oil, if it continues, could be representing something from a larger economic perspective. And we know that the 10-year yield follows. So as oil went down, the 10-year yield went, which is typically good for bonds. Bonds were up slightly today. Remember, oil, this black line, has been making a series of lower highs. What has bonds been doing? They've been making a series of higher lows and higher highs. So right now, bonds seem to be that safer bet, but just know you're probably going to deal with some, up and down, side to side type movement, especially if oil starts to recover. The dollar, right, has been putting in some higher lows, which could be a positive sign, or, right, is it eventually going to roll over like it did in Trump's first term in 2017, where it found its September low, rallied, and then right at about this time, it found its high for the year, or sorry, not high for the year, but high for the month of November, basically, and then it kind of just doodled off until 2026. If we take a look at the sailor to shift tool, we are still on a sell signal, sell trigger, and Bitcoin really needs to step up here, and it needs to step up here quick, but the charts aren't looking all too hot. That's not what's happening in gold. Gold saw a nice big rally. Silver saw a nice big rally, so look for those to consolidate there as well. But if I look at Bitcoin on the weekly time frame, you can see the price momentum oscillator just been heading straight down as price action has been going higher, diverging, right? But now we're starting to get the averages like the 10-week, 5-week, right, starting to cross and actually trend lower. The 30 and the 40 week, they're still holding up here, but the longer we stay going sideways or even lower, these are going to flatten out to start turning back down as well. The daily time frame, you can see we're underneath the 200-day. It is still inclining. Relative strength line between Bitcoin and S&P 500, very weak right now. So just be very cautious. I'm looking for the buy signal, the buy trigger. We're not there yet, but perhaps we can get there, fast. Hopefully more sooner rather than later. As far as Ethereum goes, Ethereum did break lower. This looked like it was going to break lower. We've been talking about how this looked like a little bit of a topping pattern and how we'd come into about 3,000 to 3,200. We snapped down there very quickly. Since then, we recovered, but yet it's kind of flagging out. So, and we really haven't recovered some of these key levels in and around this, 4,000 maybe would be a little bit more better of a level. But even then, just keep an eye out here. It's just putting now a series of lower lows and lower highs. Okay. So it's not looking all too hot now. Once again, we need that to step up and step up quick. We did see a good bounce in markets, and these signal charts, I believe, really helped us get in front of that. As you can see, the bullish percent index for the Nasdaq Composite, now it's working back out of oversold condition, which got oversold, and we talked about that, and then we saw a nice little bounce. SPX, same exact thing. It got oversold, said, this is where you can potentially look for divergences or for bounces. It bounced. Financials, we talked about the bullish divergence that was forming, started to see it bounce up a little bit. NYSE over here too, working off those oversold conditions, seeing a nice little bounce. Let's take a look at the larger market cap names, and then we'll get into some of the tight stocks that I'm looking at and call it quits here for the day. As far as Apple goes, we did tag the upper weekly implied move. We're above a 5-day moving average. These are 30-minute time frames, by the way. I'm looking for this thing to just continue to consolidate. If it does, then we'd be looking for maybe next week to see if we can reach up to its upper weekly implied move. Now, if we start getting below the 5-day moving average, it starts to flatten out or turn down, I'd be much more cautious until we start to see price pick back up again. Microsoft is trading outside of its upper weekly implied move after some pretty significant selling. No surprise there. We're getting a little bit of relief. Okay. Now, what I would be paying attention to going into, the next week, if we go up higher, maybe consolidate, pull in, let the 5-day moving average flatten out a bit more, see if it can start to turn back up, see if we can hold this low right over here, and then, potentially set up for a break from this all-time high VWAP, and that might open us up for a really nice rally up into and around this range coming into December or year end, whenever that may be, maybe mid-November, right? In the back half of November is typically pretty bullish. If we take a look over at NVIDIA, 5-day moving average is still declining. We are holding the November low VWAP. We're below the all-time high VWAP. So I would just say it's if you're long right now, I'd be much more cautious underneath these lows right over here, right? I'd be much more cautious under there because that's a low VWAP and the 5-day moving average is declining. If it does fall under there, I'd be looking at a gap fill as a potential level of interest. And then obviously it opens the door still to the lower weekly implied move. If we start breaking up from here, you have your upper weekly implied move, which we did tag earlier in the week, and we have our all-time high VWAP there kind of in confluence. So I'd be looking for it to consolidate if that's the case, flatten out, start to turn back up, and then maybe set us up for a nicer move through there. Google just going sideways. This has been quite a big run up. It's got outside of the weekly implied move, came back in. I'm just looking for this thing to consolidate through price and or time a little bit longer before getting ready to maybe make up some sort of a trade. Remember, if this thing, were to break down here, I mean, it's still I mean, even if it were to come way down here, it's still really in bullish context overall on the larger picture time frame. So I would just be looking for some more time to consolidate. Amazon, pretty similar situation, right? These are the all-time highs in Amazon. It's been backing off, consolidating. It's below a declining 5-day. If it does come down here, once again, that pretty much is not, I wouldn't say that that's bearish either. I would just be looking at that as more of a longer term, not even a longer term, right? Just more of a consolidation. So say if it were to come in here, maybe retest this VWAP right here. I don't have the exact date on it, but it was from a significant low. If we come in here, doodle around, start to flatten out, this starts to come in, starts to turn back up. Maybe we do something like this and then retest these all-time high VWAPs or break through. Now, if that's not the case and we start breaking through right away and the 5-day moving average flatten out and turn up, I mean, that would open up the door maybe next week to go test this 258, that all-time high. Now, if I look at Tesla is still below its declining 5-day moving average and it's kind of sitting at these lows. So, a big move back up in Tesla, that would come to these prior highs, not the all-time high, but a prior high. And then we would be, potentially looking for this thing to start to flatten out through here. That'd be the more bullish take. So this one's going to take a little bit more time, in my opinion. Now, if we start breaking down lower, I'd be looking at that 400 range and then maybe look at larger time frames because overall Tesla as well has been in some bullish context. It's not, it's a stone's throw away from, that all-time high in that 500. So this one's still on the radar for that, but I want to see it price prove itself before anything. If we take a look at Meta's been a lot weaker too, especially after its earnings. You can see its earnings VWAP right here and its upper weekly implied move, no tag of it and no tag of the lower weekly. So if Meta were to break lower and you want to, say if you want to go long Meta, I'd be looking at the daily implied moves and the lower weekly implied moves, maybe even outside of them to potentially start to scale. And then if it breaks down through here and maybe even goes lower next week and tags its lower weekly implied move, you can scale again if you think that Meta is going to see some sort of a bounce into year end. But right now, in the shorter time frame and even the daily time frame, it's been a lot weaker of a name. So you've got to make sure that you're very strategic if you're trying to buy the dip, right? One way to be strategic is wait for price to prove itself on the 5-day moving average and see if we can come back up into these levels, and or via really strategic position sizing, so you don't overload it and you don't go all in on your first entry, because chances are, right, if you thought this was going to be the low, you're wrong. Thought this was going to be the low, maybe you're right, but there's a high probability, right, we're right here that we go test those, right? Okay, so let's continue on and look at some of the stocks that are setting up more quietly. These are some beaten names. I'm not really, but we have one in here that's much more well-known, but these have just been quietly consolidating in bullish context, setting up decent risk to reward. So I figured I'd share them. These are from my tight list, which also I update every week in the Discord. So if you want to do the Discord, $16 a month, right? That's through Patreon, right? And then you sync your Discord up and you get all the benefits. This is another one of those benefits. So I'm just sharing with you some of the names that are still coiling up. NVT, right? Consolidating after its big move over here, just flagging out. So if we can stay within these ranges and then break out, I'm looking for a retest of these prior highs. This was an earnings move. Now earnings is consolidating, volume's drying up. Today we saw a little bit of an uptick in volume. I like these type of trades, post earnings where we get a breakout, consolidation into bullish context. So if it breaks out through 28, I'd be trying to look for targeting 30 and potentially even higher. The same thing goes with HXL, big earnings move. Now it's just consolidating in overall bullish context. Just some good looking charts and the risk to reward is setting up. Capital One Financial, this one's been kind of just going sideways with some really tight closes in and around between 220 to 225. So if this starts to break out, I'd be looking for maybe a retest of 230 slightly over with a stop maybe down here and try to trail it up, and then even potentially break through 230 if we're going to keep getting moves here in some of the financial names. Another one is CALX. CalX is pulling into an inclining moving average over here and staying there, and it's really just right after earnings been consolidating. So once again, if we can see proven strength, get back above those 5-day moving averages, start to break out and prove itself, it'll at least open up the door for a good risk to reward to retest those highs and potentially higher. And remember, this game is all about looking for those good risk to reward setups and, making sure that if it's a losing stock to just get out, like don't fight it if it's going against you and you're you're losing money on it. You want to take, small haircut, but all of a sudden, if you get, one winner that just goes like straight up or even higher, it erases all those losing trades. And that's how you got to do it, especially if you want to be in this game for a long period of time. You look for low risk, high reward setups, and you don't over leverage on the position or make it too big. You focus on your positioning size, the thing that you can control, and you do that strategically time and time again. That's all I got for you on today's episode, everybody. Hope it helps out, gives you some insight.